A recent report by the Sydney-based Lowy Institute found that China has surrendered its position as the largest single provider of development finance in Southeast Asia in the wake of the COVID pandemic. Given China's current economic and financial problems, this trend will be unlikely to change anytime soon. The Lowy Institute has published the Southeast Asia Aid Map that tracks financing for over 100,000 development projects funded by nearly 100 countries and international organizations between 2015 and 2021. According to the map's data, Southeast Asia typically receives about $28 billion yearly in official development finance. Beijing gives out about $5.5 billion annually, much of it in the form of loans to infrastructure projects. Alexander Dayant of the Lowy Institute said China was the region's most significant development finance provider from 2015 to 2019, accounting for 25%. But by 2021, China's share had dropped to just 14%. Beijing's official development financing, or ODF, to Southeast Asia in 2021 fell to $3.9 billion, from the $7.6 billion peak recorded in 2015. The country has slipped behind the Asian Development Bank, or ADB, and the World Bank during the COVID pandemic. He said, "China's economic environment has changed. Its economy is slowing down. Development investment by other countries and international organizations has filled the void left by China's withdrawal. Japan's unremitting efforts have brought its total accumulated investment capital to nearly that of China. China's figure for the entire period equates to $37.9 billion, mainly in the initial period. Japan's perseverance has brought their total accumulated investment capital to $28 billion. South Korea has more than $20 billion in accrued investment capital. Germany, the US, Australia, and France, in that order, accounted for a large portion of the total investment, with amounts between $8.5 and $5.4 billion. Beijing's major turning point does not necessarily reflect a shift in its foreign priorities towards Southeast Asian countries. That is understandable because these countries are geographically close to China and are essential to China's trade and defense routes. Nor will these countries likely turn their backs on Chinese money, although some have shown reluctance to join Beijing's Belt and Road Initiative. Instead, China's retreat again reflects China's pressing economic and financial problems, making the situation unlikely to be reversed. And while Xi Jinping and his colleagues in Beijing still dream of global domination, in reality they are faced with a harsh truth: China is retreating from its backyard. Dayant said Beijing has also encountered setbacks in several infrastructure megaprojects in Southeast Asia, including the East Coast Rail Link in Malaysia and the delay-plagued Jakarta-Bandung high-speed railway in Indonesia. Finally, Beijing is also increasingly aware that some countries in the region that have borrowed heavily from China, especially Laos, would struggle to repay their debts. An analysis from prominent investment bank Goldman Sachs recently highlighted the lingering effects of failures in China's property development sector, most notably Evergrande, a major developer. Goldman analysts conclude that this sector, which once accounted for 30% of China's economy, will continue to shrink for the foreseeable future. After a surprisingly quick start in early 2023, China's economy has slowed markedly. China's exports were about 7.5% lower in May than the previous year. Imports, a reliable indicator of domestic economic activity, were 4.5% lower than the last year. The economic stagnation is also reflected in reports showing a drop in raw materials imports. Coal shipments, which are still crucial to Chinese electricity production, have fallen precipitously from the highs of March last year, with signs that Europe may have fallen into recession and that the US economy is slowing and perhaps also on the brink of recession. China's crucial export sector is unlikely to recover soon. Indeed, many now think that in the face of a sluggish global economy, China will have difficulty achieving its 5% real growth target. Faced with such economic constraints, it is also unlikely that China will soon restore its former prominence in Southeast Asia.